Welcome to the complimentary MoneyFlow week-ending review on Friday, January 24th, 2014. In this video, we will review our performance related to our recent analysis from the most recent Bucket Weekly newsletter. Wealthy Bucket does not provide investment advice. Please consult a financial professional before trading and investing on your own to see if it is right for you. Trading and investing in stocks, options, futures, and currency carry risks that may result in a financial loss. So some of you may be wondering what the hell just happened the past couple of days, we'll call it. And we had talked about this in our Bucket Weekly newsletter last weekend, and we were anticipating the market to move sideways, and it did for the majority of the week up until Wednesday. If you recall, our premium members out there who are watching this, we talked about how the market still hadn't found direction. And in a sideways market, the market can go in any direction. It can go upwards or it can go downwards. But we did caution you, our premium members, to not take any more long positions until the market makes a decisive move. And in the last couple of days, the market, you're looking at the S&P right now, the market did make a decisive move, and it was decisively downward. So you can imagine that if you just started buying more equities, yes, the trend was up. If you just started buying more stock, you would have lost money immediately. So this is why we cautioned, actually for the last 2 weeks, we said don't take any more fresh positions unless the market retests. So this is why we were very lean with our positions. We feel we already took on too many trades for the past couple weeks or in January altogether, and the result was we ended up getting stopped out for a number of our positions, and I'll talk about them. And thankfully, we were focused on strong positions whereby the strong positions could negate those losses that we incurred from getting stopped out from other positions. Now, you're all wondering, well, how far is this going to go? Nobody knows how far down the market can go, and nobody knows how high the market can go. What we do at Wealthy Bucket is we anticipate and we forecast the market on a level-to-level basis. We receive emails every morning from different newsletter companies or commentary companies that we subscribe to, and it's funny because people want to come out with the daily news saying, well, the markets are rolling over today. Well, gee, I know that the markets are rolling over. You don't have to tell me that. Tell me what it can do and tell me how to anticipate what the market should do based on a number of factors. And I think that's what a lot of newsletters or commentary out there are not providing their subscribers. They're just simply on the day, and they're telling you, well, the market's traded down. Well, I got it. Well, how do I prepare for that? And when we talk about our Bucket Weekly newsletter, that's where the value really starts to come into play. And we'll take a look at the yen. Those of you out there who are not members, who are still using their quirky little indicators to tell them when it's overbought and it's when it's oversold, or the momentum is not there, or the institutional buying, or quiet accumulation, or fib, or deviation, or whatever you want to call it, it doesn't matter. The point being is that the ultimate indicator lies within the market itself. And this is why our multi-asset investment model is so valuable, because of how we anticipate the markets. So for our premium members who are listening out there, recall that we said that yen could retest this level, and on Wednesday it had not. On Wednesday it was showing signs that it was going to come down. However, we did talk about that our anticipation was that yen could retest these levels. If yen continues to move downwards, if it closed below this level here, then we would be in good spirits, so to speak, that we would be comfortable that the yen would continue lower. And if the yen continued lower, then the equity markets would continue higher. But be prepared for a retest. And that's exactly what happened. And it did more than retest. The yen actually shot through our immediate resistance levels, and we're going to have to change up our levels in our Bucket Weekly coming to you this Sunday, so you can prepare for how the market is going to turn around, if it's going to turn around, and where you can anticipate for it to start turning around, so that you can test the market and get back in there by buying long positions, because the trend ultimately is still higher. So if you look at this, there's a direct correlation right now between yen and equity. If you look at the dollar and equity now, we talked about this last weekend, how the historical correlation has come back into play. And look at the chart. The charts don't lie. Why do you need a technical indicator when your indicator is the market? This is why our members value the Bucket Weekly. That's why our members value what we do on a week-to-week basis, because we're timing the market for you. Now, that doesn't mean when you time the market that every trade is going to be accurate and bang on and you're going to make money every time. If that's what you're looking for, you got to keep going somewhere else, because nobody can get every trade right. It's impossible. But what we do here is we correlate all the markets, so that if one thing happens in the currency markets, then you should expect the equity markets to do X. And that's exactly what had happened. We had anticipated that the dollar and the S&P 500 had come back into historical correlation, as it did, and it couldn't break through our immediate resistance levels, and it did not. And what had happened? Dollar trades lower, S&P trades lower, and you have your direct result of the markets selling off. Now, how far is this going to go? Well, here's a freebie for you those of you who are not premium members. You have your little nugget now. This is your next level. And for our premium members, we're going to help time it. We're going to look for additional levels in the event that the market continues to move lower, based on a number of factors, using our multi-asset investment model. So that would help you look for the best possible re-entry point into the markets, or help you wait for the best re-entry points into the markets. So let's take a look at some of our ideas that we had going on this week. And we'll start it off with our copper trade. And if you recall our video on Wednesday, we talked about how the market copper hasn't moved enough in order for us to move that stop. I mean, this is Wednesday right here, and you can't really move your stop. Even on Tuesday, when the trade is still profitable, there's not enough room to move the stock. And if you move the stop too tight to where it currently trades, then you're not giving the stock or the future or whatever it may be, the asset class, enough room to maneuver, to handle its day-to-day vibrations, and then you get stopped out prematurely. So we left this one, and ultimately we got stopped out for a loss on copper. We had expected and we had anticipated a few weeks ago that copper should break out, and it did not. That is our anticipation, and we're okay with being wrong on that trade. We had our material sector ETF, and on Wednesday, recall that it had traded higher. What we did was we moved the stop from break even all the way to this level here, so that we can take profits out in the event that the yen continued higher. And the timing of it all is almost like clockwork. When the yen starts moving higher, then equities will start moving lower, and we got stopped out on this. We took some profit on this one. The Dow futures, we also mentioned this on Wednesday, that there just wasn't enough room. There just wasn't enough room to change the stop, to manage or move up the stop, because the Dow still hadn't moved up high enough. We got in the trade on this day here. We've been holding and holding and holding it, and there just isn't enough room. So we talked about this on Wednesday. We'll allow it to take maximum loss on that, and we took a loss on that as well. But when we this is not all about doom and gloom here. I mentioned earlier on in this video that we're spreading our risk around. We're looking for the best, strongest assets out there to trade. And strongest is probably not the best word to say Australian dollar, but I should say strongest opportunity. So your wins should be able to negate your losses. And for example, for a trade like this, when you're pulling in about 140% ROI on that, it negates a lot of the loss that you may incur for being wrong on some of your ideas. And it's okay to be wrong, because the market is the only thing that's always right. You just have to have a plan, and run with it. And this is why the levels are so important. And this is why our members should be using these levels, and they value these levels. When you look at the open here, or the close, we're looking at the close of today is 0.866. Our target was 0.865, and it traded right through that. So this is why these levels that we create for our members are so darn important, because it really, really identifies where markets can turn. And when you can identify where markets or different asset classes, I don't care if it's a currency, I don't care if it's an index feature, if you can identify where the buyers and sellers can start stepping back in with a high degree of accuracy, then you can really, really start to time it, and then you can really, really start to show patience and execution, and your win percentage will generally be in your favor, and your reward to risk is in your favor, and at the end of the year, you should be profitable. Let's take a look at our NASDAQ, and this was another one that we got stopped out. We got stopped out for a profit on this one. We mentioned this during our Wednesday video, that because the NASDAQ had about a 37 point ATR, average true range, you couldn't move the stop. We didn't want to move our stop to our first take profit, or our first target. We had to move it down a little bit lower, and that's exactly what happened on Thursday. We get stopped out and we get taken out for a profit here. But these trades are an idea, and to show you why it's so important to find these levels. And one of our saving graces, along with the Australian dollar, was our crude trade that we waited almost over a week for, and finally when it did break out, it paid off. And when it pays off, then it really, really starts to negate some of those losses that you do incur. And I'm sure many people out there, whether you call yourself a day trader or a swing trader or whatever you want to call yourself, you took some hits this week. Now, that's why understanding the multi-asset investment model will allow you to remain calm in all market conditions, because all these asset classes are intertwined together, so that you can time the market, so that you can remain calm, you can learn to measure the market from a level-to-level perspective, so that you don't panic when you're making money, and you don't panic when you're losing money. So those of you who are out there, who are listening, who are premium members, we thank you for your continued support. If you have any questions, always email us at service@wealthybucket.com. Those of you who are not our premium members, who are receiving this complimentary video, we always have our 14-day free trial. Go visit us at www.wealthybucket.com/promo, or you can just find the 14-day trial link on our homepage, which is www.wealthybucket.com. We will be sending out our Bucket Weekly newsletter this coming Sunday, and we'll be maintaining and changing a lot of information on our multi-asset investment model. Look out for that, and we hope you have a great weekend, and we thank you for stopping by the Wealthy Bucket.